Good afternoon, everyone, and welcome to the O'Hare Wealth Management Weekly Update, October 31st, 2024. Happy Halloween.
Happy Halloween.
I'm Jerry Jones, joined by JJ O'Hare. We're with the O'Hare Wealth Management Group. Every week at this time, we get together for a 15-minute update on the markets and questions that clients have submitted to us of a financial nature. If you have a question that you would like to submit, please do not hesitate to do so at service@o'harewealth.com, or you can call us and or text us at 414-644-0060. We've got a lot to unpack this week, so let's dive right in. JJ, I read your notes recently, and it appears you believe the market is on the rich side. Should we be selling some of our stocks right now?
Well, it's funny we're talking about this because it's Halloween. The market's giving us a bit of a scare this morning.
Good point.
But no, this is the tough part. Is even in our notes we said, hey, we think we might see a pullback. People might remember we talked about a pullback back in July, and then we got one. We talked about a pullback back in March, and we got one. We also talked about a shift from sort of the Mag 7, and back when I said this in July during our market outlook, if I remember correctly, the market was up 22%, and the equal weight S&P 500 was up 1. Today, the equal weight, I guess before today, because I'm not sure how it's going to end up, but the equal weight was up close to 13, and the market was up 23. So the market really hadn't made much progress, but the equal weight had. So there had been a rebalancing. The key here is to stick with your principles and keep that 5-year time horizon. Jerry, I don't know if you remember this, but you have to take a 5-year look. If you look at Zoom and Peloton, and you got to shift to these things, or you got to make a quick change, it works. But if you look at a 5-year chart, they don't always look great. No. So should we be selling stocks right now? If you want to go to the next chart, I know this is a key one we talked about many times, but staying fully invested is the way to go. If you miss just the 10 best days in the market, your returns are in half. Right? You miss the best 20, it's even less, and yeah, you miss the 30 best days in the market over, you 83% less returns. So no, for us, and that's, by the way, that chart goes back to 1994, so it's really 30 years of data you're talking about. And when do people miss those days? They miss them on the downside. When do people sell? They sell. You see huge selling usually in the final day. That's the capitulation day. And then the next day you see a big upswing. So that is the other issue with trying to time the market, is typically these big up days are right around the same time you get those big down days.
Good point.
And talking about the stock market being hot, if you remember our quarterly chart party, one of the other stats I mentioned was on a 3-year rolling basis. I believe the stat goes back to 1992. If you bought on any given day, 3 years later, you're up on average 40%. But if you bought on any given all-time high day, you're up on average, I think it was 43.8. So you're actually up more if you bought just on all-time highs. And why is that? Well, it's what we've talked about in the past. Highs beget highs. So do we expect a small pullback here? It's election week. Volatility is abound. And there's a lot of reasons and reorientation. And I think people remember there's every time we have an election, it seems like the market will move on it. And then probably 6 months later, a lot of those moves are short-lived.
Right.
So, no. Go ahead, Jerry.
No, very good. Thank you, JJ. I've read a lot about the energy needs for AI and data centers. Should we be looking at buying utilities that provide energy for those centers?
We're always looking for new ideas. And one of the things we've talked about over the years is what do you buy and why. But a lot of times we make clients a lot more money by what we're not buying. Some of these small utility players that I've been talking about, and by the way, it's not the big utilities, it's the very, very small utility players that are talking about some of these AI data center generation pieces. They're already up like 100% in the last year. They've already moved significantly, partly on this story. The big utilities, the problem is between regulation, the amount of money they're allowed to make, and the way they're structured, and their legacy assets, it's not easy to pick one of those and say that's an obvious winner. So yes, although they are probably going to be providing more energy, utilities have been consistently providing more energy for us for the last 15 years, and that whole sector has not exactly been a winner. And it's usually something we tend to avoid because of the huge regulations and its inability to capture stories like this as quickly. And when you look at some of the stories we are hearing about how the need for energy, you're seeing companies trying to find their own separate solutions away from utilities. That doesn't bode well for that story intrinsically. So, it's something we're keeping an eye on. It's something we've been watching, but it's one of those sectors historically we've always avoided.
And would you consider that more speculation right now? People are trying to speculate what the next thing, the next big thing is.
Yes, I mean that is part of it, and it's funny. I was just revisiting this topic today with somebody else talking about pot stocks, and I remember in 2014 where they started to become legal, and then they were listed on the Canadian exchanges, and they became a big deal all of a sudden because it was going to be the Wild West, and everybody was going to make money because everybody knows if you're in the drug trade, you make money. And turns out the stat, I think it was released by, I know it was on the Freakonomics podcast. I can't remember which university they cited. Is it less than 24% of shops that sell pot make money?
Sure.
I mean, that's a devastatingly low number.
Two out of 10 is not good.
So when you talk about speculation, even if you're right that one day the weed will be legal across the United States and be freely available, you're not quite sure who actually is going to make all the money doing it. And so even with this utility play, it's the same thing. Even if they are good at it, it is a bit of a Wild West situation. And this is not the first one. This is not the last one. The dot-com bubble was the same, right? I mean, if you asked somebody in 1999 who's going to dominate the internet, and you would have said Yahoo and AOL. And, I mean, there's a whole bunch of names we don't even remember anymore that you would have picked as being the winner. And their thesis that we do everything online, everybody's watching this online, right? That would be true was correct, but how you made money and who made money wasn't nearly as easy to predict. So we're trying not to jump on this too early. And as Peter Lynch said, you can have a lot of stocks that can go up 10%, not own them. The more important is to not own things that get decimated and go down to a tenth of their original value. That's really the bigger trick.
Exactly. Great. Let's move on. Do you believe the Federal Reserve will lower rates before the election, which is next week?
Which is next week, Tuesday. This was a specific question asked to me by a couple of people talking about how the Fed was going to step in to try to change the election. And the answer is no. The Fed would probably discredit themselves and do more damage to their credibility as an institution by having an emergency meeting. Now, they have a meeting, an FOMC meeting, next Thursday after the election. So, could they, make an announcement then? Yeah, of course. And we're expecting them to continue to lower rates. But the Fed has beaten inflation. You talk about the presidency and so forth, but really the Fed's mandate is low unemployment and stable prices. They wanted to get us back, and we just saw the PCE numbers yesterday. Right now, I think we're trailing at like 2.7% PCE. Long-term inflation has always been like sort of 2.2. It looks great. They won the war on inflation. They have room to lower rates. They don't need an emergency cut. And if anything, the economy still looks incredibly resilient. And what we put on our notes this week was that soft landing, no landing is something people are talking about. It means the economy might be too resilient. They might not be in a need to cut rates. So an emergency meeting to lower rates would be bad for their credibility. It would be bad, probably policy, and it would ultimately probably not make that much of a difference. So no, we don't expect them to step in today or tomorrow and make a surprise cut. I'd be shocked. But we do expect them to keep going. And remember, the Fed is still predicting to try to get us that 3% sort of neutral rate. That's where they're looking. And going back to that inflation question, that's the other one we're seeing. We're seeing higher rates on the long end. It's because the economy is still so strong.
Consumers keep spending.
Consumers
coming in the holiday season. I don't think that's going to slow down anytime soon.
10-year Treasury is over 4.3 this week.
Right.
I gave the quarterly market outlook at the beginning of the month, and it was 3.8. So it's moved really, really fast.
It's definitely not what I learned in economics back in the 80s.
And anybody who thinks the Fed cutting rates means the long end of the curve has to come down is forgetting that the Fed does not have control of the long end of the curve. The long end of the curve is controlled by the market. The market is predicting those rates. And what I said before, and I keep saying it, if the Fed really gets to 3%, well, what's the 2 year look like? Well, probably higher than that. Probably like 3.2, 3.3. What's the 5 year look like? I don't know, 3.5, 3.6, 3.7. What does the 7 and the 10 year look like? I don't know, probably like 4.1, 4.2. That's where they're at.
Right.
So the room for rates to go down without a major recession, right? And that's the big thing that would bring long term rates down. Without a major recession, just doesn't seem to be in the cards. And go back to our very first question: why aren't we looking forward to selling stocks? There's only a few things that cause recessions, right? Major commodity spikes, usually regarding energy. Oil's, in the 70s. We don't seem to have that huge spike coming. You have a hawkish Fed that is stomping on the economy with higher rates.
Not happening.
That doesn't seem to be the case. You've got then a black swan event, which you can't predict. COVID came out of nowhere.
Correct.
I guess the question is when you're looking forward, and I guess the last one is extreme valuations, is that starts to basically beget a recession through falling prices. That's the only one that I can even kind of argue is on the table. The one you can't predict, and the other two are definitely going the wrong direction for being a major recession indicator. So no, and prices, as I talked about before, the arrest of the S&P 500 has made a huge surge going forward. Absolutely. So we are seeing that broadening out of the overall move in the market. That bodes well for that last piece. Is are we overly hot on prices? The answer is well, not if we keep broadening out. We won't be.
Sure. Moving on, once again, just a reminder, send us your questions every week. Service at o'harewealth.com or 414-644-0060. Our book recommendations of the month and for the new month, September, October, and November, December. JJ.
Frostbite, fantastic book. Make you very boring at dinner parties. Talking about how...
It'll make you sound very smart.
Yeah.
Especially about groceries.
You can talk about everything you're eating at that dinner party was frozen or refrigerated for way longer than you think it was. And how important cold storage is to our food and our modern economy and our modern way of life. And the next one, thinking in bets. One of the questions we get right now is, what is the likelihood of a victory in the election? Mm-hmm. The answer is right now the betting odds are 64%. Mm-hmm. Well, that means that if you got to run this several times, we don't get to in real life, but if you did, it means that the candidate that's currently up, 64%. It means that 64 out of 100 times they win, and the other candidate would win the other 66 times, or 46 times. That those are not long odds. I mean, if you think about that logically, it's a couple of coin flips. Can you have a heads and then a tails? It's 25% of the time that happens. I think anybody knows if you play poker, and that's what Annie Duke was famous for. If you play poker and you caught that bad card at the end, and you think there's only one card that can save my opponent, and they get it. That does happen. A lot, right?
Especially to me.
So no, if you think, sometimes you can make all the right calls and it didn't work out because of something that could not have been foreseen. And the flip side is sometimes you make all the wrong calls and it works out for the exact same reason. So if you think logically, sometimes you can reevaluate how good your bet was or wasn't. And that's something we think about when we're managing portfolios all the time. Is are we making the right decision or are we getting lucky? And trying to evaluate which is which.
There's no luck.
I'd rather be lucky than good.
There you go.
But it's easier.
Well, thank you for joining us today. Just a reminder, next week, obviously, it'll be a big week politically speaking, but we'll be back here again next Thursday to talk not only about the after effects of the election, but more importantly, those effects on the financial markets and your portfolios potentially. So more importantly, we want you to be here to talk to us, get us those questions. We love to hear from you. We love the feedback on the calls. If you have anything that you would like to see us do differently, please don't hesitate to make that suggestion. Also, don't hesitate to pass this on to a friend or neighbor or relative that you think might benefit from this, and we'd be glad to talk to them as well. On behalf of JJ, myself, and the rest of the O'Hare Wealth team, we'd like to wish you all a happy Halloween and a great weekend. Thank you, everyone.
Have a good one. Trick or treat.